Hello everyone. Today we're going to be doing a review on a website that I like to use. It's called Simply Safe Dividends, and I use this to determine which stocks I want to pick. So if we go to the website simplysafedividends.com, so you can do a free 2-week trial, and then it does cost money. If you do want to purchase it, it's a yearly subscription. I think it's a little bit over $300 for the year, but if you're someone who doesn't necessarily know how to do all their own research on stocks, or they want someone else who does this all the time, their opinion, then this is a good website for you. So I will just build my own 14-day trial right now. So we'll just make up a name. Alright, so we get our free 2 weeks. So what we can do here is we can look up companies, we could see what portfolios they recommend, and we could even create our own portfolio here if we click on this tab. So let's say we want to look up company Coca-Cola, ticker KO. So on the screen, super easy to read, but it has a dividend safety score here, and every single stock that we're going to look at is going to have a dividend safety score. Over 80 means extremely safe, over 60 means it's pretty safe, and below that it starts getting less and less safe. The way that they do this is they look at how long the company's been paying out a dividend, the speed at which it's paying out a dividend, how high their payout ratio is. There's a bunch of factors, how they did in the stock market crash. So from the top here we have this dividend safety score. I like to look at that, and then you can see their yield is right here, and you see they have a 5-year average here. So since the yield is low, if the company didn't lower the dividend yield, then likely the stock price has gone up, which causes the yield then to go down. You can see here Coca-Cola is a huge company, $237 billion. Their growth is pretty slow over the past year, but they have more data about that below. And then you can see their beta is 0.48, so that's pretty low. So they have that for all of the stocks. Here is the stock growth that I was talking about before. So over the past year, it's been 3%. But you can see over 20 years, it's about 8%, which is pretty fast. You can imagine if your stock, if the dividends are growing by 8% per year, that's pretty fast. So, and then also Coca-Cola has been paying it for 57 years, and it's been increasing steadily over 57 years. So this right here just gives a ton of information that you'd otherwise have to do a lot of research online for, and these are people that do this for every single stock. So let's look at another stock. We can do 3M. Okay, so 75 is pretty safe. Has its yield here, price, size of the company. If we look down here, it's got the dividend growth over the past 20 years, which is 9, and it's gotten even faster in the last 5 years. Also here, they have more information about the company. They have here some notes about it, including research and recent articles that people have published about the company. So you can see that, and then they give their opinion typically at the end of it. So if we scroll down, you can see their turnaround plan and long-term outlook they typically give from what the company says. And concluding thoughts. This is where Simply Safe Dividend talks about what they think about the company. So it's a pretty good website, and then here we can create our own portfolio. So let's create one. So let's say we want Coca-Cola, put it, how many do we want? 50. I think it was around 55 was the price, so we'll just put it at that. And you can see right here, Coca-Cola with 50 shares, you're going to get $80 a year of passive income from those dividends. Okay. Also, the price here is $55.24, so it gives you the daily change in the price and then the price that you bought it at originally. So then you can see your yield on cost when the stock price goes up or down. So then we can add another holding here. Let's do 3M. Let me just go back to that. How much is 3M costing right now? $175.83. Okay, so we added that. You can see that the income per year changes. And you could also see if you click on income, it'll break down what months they're paying out. So they're separate months, so you can see just different amounts of income per month. They also have here a screener that's pretty good. So if you see this dividend safety, you can limit it, let's say, to only very safe companies. Dividend growth streak. Okay, at least 10 years of paying a dividend that keeps growing. And one that's growing average to fast is what I'll put. And these are all the stocks that follow what the screener wants. So these are all, and if you click on this, it'll show you from safest to least safe. Could also add more filters here, so we can add, let's see, timeliness. So let's see if let's see undervalued ones. And all of these stocks here are considered undervalued and safe. If you go to ideas, they give a list of stocks. So let's say high yield stocks, anything over 4%. They have a list of them all here, but not the same as the screener. So it's any, the dividend safety is not necessarily what you want. You can go to our portfolios, which is where they show their different portfolios on the website. So they have different ones. They have conservative retiring ones, typically target a higher dividend yield but lower growth rate. And then we have long-term growth one, which is where they have a lower yield typically to start with, but a high growth rate. And then a blend of what they consider to be their top 20 stocks. Also on here they have timeline. So ours is just new, so they don't have a timeline for us. But let's say Coca-Cola increases its dividend, then that will pop up here on this timeline. You'll see exactly how much it's increased by. So this is a cool website. It gives a lot of information that you can use, and I use this for all of my stocks that I get. So hope you enjoyed that video, and hopefully you try out the website.